To Roth or not to Roth? That's the question that confronts both financial advisors and their clients alike. And this is true whether you're considering making an annual contribution or thinking about converting an existing retirement account. The idea of tax-free growth in a Roth has a lot of appeal, but simply saying that Roth IRAs are always the better choice would be foolish, in my opinion. Okay, so here are 3 factors that may determine if a Roth IRA might be better for you than, say, a traditional IRA. First, you need to consider your current versus your future marginal tax rates. I mean, this is by far the biggest determining factor in the Roth versus traditional IRA debate, and it makes sense. I mean, if you think about it, you are looking to create the greatest amount of wealth by paying the least amount of taxes at the lowest tax rates over your life expectancy. And so, if you look at where your scenario is today and you believe your rates are going to be the lowest today, and then you'll experience higher potential rates in the future, then consider paying these lower taxes today and just go with the Roth. But if rates for you expect will be lower in the future and they're highest today, then it makes sense to defer and do the traditional IRA, because that may be the better choice for you to just pay the taxes later when you take the money out. So the second factor to consider is what I call tax flexibility. So what that really means is you want to be able to be in control of the timing of when you pay taxes, not just today, but well into the future. And so one of the key distinctions about traditional IRAs to understand is the concept of required minimum distributions, or RMDs for short. You see, with traditional IRAs, you're required to take money out of that IRA account, taxed at ordinary income tax rates, once you turn age 70 and a half. So if you do a really good job of building up your wealth inside of a traditional IRA, there's a potential that you're forced to take out more money than you need at age 70 and a half, causing you to get pushed into a potentially higher tax bracket. That's not tax flexibility at all. However, on the flip side, if you bite the bullet, you pay the taxes today or earlier and fund a Roth IRA, you can accumulate that wealth on a tax-free basis, and you're not forced to take that money out when you turn age 70 and a half. There are no required minimum distributions for owners of a Roth IRA. So that's what I call total tax flexibility. Oh, by the way, a non-spouse beneficiary of a Roth IRA does have required minimum distribution rules, but they're not taxed, but they could be penalized if they don't do it. So continuing on the topic of flexibility, my third factor is really about the flexibility and accessibility of your money once you put it into these accounts. So be advised, when you put money into a deductible traditional IRA, that money has to remain there until you're at least 59 and a half years old to avoid a 10% penalty. But with a Roth IRA, you can withdraw your contributions at any time for any reason. No taxes, no penalties, and if you're over age 59 and a half and have had that Roth IRA for at least 5 years, your earnings also come out tax-free. So if you like your money to be accessible and on demand, the Roth IRA may be better for you. But remember that current versus future tax rates are the driving force here. So while the Roth is better in many situations, it's not automatic for everyone. With all else being equal, if your taxes will be lower when you withdraw the money, the Roth can be the wrong decision. To find out if the Roth IRA or the traditional IRA could be better for you, just give us a call. We're here to help. And that's what we do here every day. And when you need a strategy, and this is something that you should consider every year, year in, year out, whether it's the right thing for you, you need to have an ongoing financial planning relationship with financial advisors that know this inside and out, and one that you can trust. This is Lucia Capital Group. Thanks for watching.